Hey everyone, welcome back to Corporate Decoder, where we pull back the curtain on what really matters in company filings. And today we are diving deep into Healthpeak Properties Incorporated, their latest quarterly report. And let me tell you, there are numbers here that paint a very interesting picture about where this healthcare real estate giant is headed. So what is the big story in this report? Well, Healthpeak Incorporated is a major player in healthcare real estate, owning and operating properties for medical discovery and delivery across the US. They focus on outpatient medical lab and continuing care retirement communities. After a huge merger with Physicians Realty Trust back in March of 2024, they are bigger and more diversified than ever. We are going to look at their financial tables and see what these big numbers really mean for them going forward. Let's jump right into the numbers on their balance sheet today, the 30th of September 2025. Healthpeak has total assets of about $19.6 billion. Now that might seem like a lot, but check this out compared to the 31st of December 2024. Their total assets have actually gone down a bit. They had almost $20 billion then. So why the decrease? Well, it looks like they shed some assets, likely by selling properties or other investments. Liabilities also saw a slight increase, going from about $10.9 billion to $11.3 billion. This means they owe more money now than at the end of last year. Digging into the assets, their buildings and improvements value at over $16 billion is their biggest asset. This is the bread and butter of a real estate company. These are the physical structures that generate their income. Development costs and construction in progress also remain significant at over $1.1 billion, showing they are still investing in future growth. Now, flipping over to the liability side, senior unsecured notes make up a huge chunk of their debt at over $6.7 billion. This is like a big loan they took out without specific property backing it. It is important for companies to manage this debt carefully. Let's look at how they performed financially over the third quarter and the first 9 months of the year compared to last year. For the 3 months ending the 30th of September 2025, Healthpeak reported a net loss of over $117 million. This is a big change from the same period last year, when they actually made a profit of over $85 million. So what happened? Well, their overall revenues were up slightly, but their costs and expenses jumped significantly. For the first 9 months of 2025, it is a similar story. They had a net loss of over $42 million compared to a net income of over $238 million in the same period last year. That is a massive swing. A big reason for this loss seems to be the equity loss from their unconsolidated joint ventures. This jumped from a little over $3.8 million in losses last year to a staggering $176 million in losses this year for the third quarter alone. This hit them hard. This likely relates to impairments on their investments in those joint ventures, as mentioned in the filing. Another factor is the gain on sales of real estate. Last year, for the 9 months, they had a significant gain of over $187 million. This year, for the same period, that gain dropped to just over $13 million. Fewer property sales mean less profit from that activity. Now, these net income figures can be a bit misleading for real estate companies. That is why we look at something called NAREIT FFO funds from operations. This adjusts for things like depreciation, which don't represent a cash expense. For the third quarter of 2025, NAREIT FFO was about $318 million, a slight increase from last year. And for the first 9 months of 2025, it was over $940 million, a significant jump from over $785 million last year. This shows that even though they had a net loss, their core operations are actually generating more cash. Looking at their segment analysis, the outpatient medical segment is their largest, bringing in over $200 million in adjusted NOI for the third quarter of 2025. Adjusted NOI, or NOI, is a key metric for real estate companies. It basically shows the income generated directly from their properties. This metric increased slightly for the third quarter and significantly for the first 9 months of 2025 compared to last year. This really shows the strength in their core property operations despite the overall company's net loss. Healthpeak's strategy remains focused on owning, operating, and developing high-quality healthcare real estate. They are emphasizing their strong balance sheet, ample liquidity, and long-term fixed-rate debt. They want to work with leading companies in healthcare and life sciences and provide top-notch property management. Their platform culture and talent retention are also key parts of their plan. But it is not all smooth sailing. The filing highlights significant market trends and uncertainties that could impact them. Higher interest rates are increasing their borrowing costs and potentially affecting real estate values. They also mention challenges in the life science industry and potential difficulties for their tenants and borrowers to meet their financial obligations. This is a huge risk for any company reliant on stable rent payments. Let's look at their total portfolio adjusted NOIE for the outpatient medical segment for the 3 months, ended the 30th of September 2025. Total portfolio adjusted NOIE was over $200 million, a slight increase from last year. For the 9 months, it was almost $603 million, showing good growth. However, when you look at the lab segment, total portfolio adjusted NOI for the third quarter was over $138 million, down from over $148 million last year. And for the 9 months, it was over $427 million, down from over $444 million last year. This suggests the lab market might be facing some headwinds. The numbers for their continuing care retirement community segment are more positive though. For the third quarter, adjusted NOI was over $36 million, up from over $33 million last year. And for the 9 months, it was over $112 million, up from over $101 million last year. This segment seems to be performing well, showing steady growth. Looking at the cash flow statement, the net cash provided by operating activities increased significantly for the first 9 months of 2025 compared to 2024. This is good news, showing their core business operations are generating more cash. However, investing activities used significantly more cash in 2025, mainly because they received a lot of money from selling assets in 2024, which did not happen this year. Financing activities actually used less cash in 2025 compared to 2024, which is also a positive sign as it implies less debt was taken on, or more was paid down relative to last year's huge merger-related financing. Their cash position at the end of September 2025 was about $160 million, down from $242 million at the end of last year. While this is a decrease, it is important to remember this fluctuates based on their investment and financing activities. Healthpeak is actively managing its exposure to interest rate changes. They use derivative instruments like interest rate swaps to convert variable rate debt to fixed rate debt. This is a smart move, especially in a rising interest rate environment. At the 30th of September 2025, they had about $43 million in potential fair value change. From these instruments, a 1 percentage point interest rate move could impact them by that much. So what is my take on all this? Well, Healthpeak is definitely a company navigating choppy waters. The significant net loss is concerning, but the steady growth in NARI at FO and adjusted NOI from their core property operations tells a story of resilience. Their biggest concern seems to be the lab market performance and the huge losses from their joint ventures. The merger with Physicians Realty Trust has clearly increased their scale, but also their complexity and debt. They are making smart moves with hedging and managing their debt, but the market uncertainties are real. Investors should keep a close eye on how they manage their debt obligations and whether their lab segment performance improves. The CCRC segment is a bright spot, showing good growth. Alright, that is our deep dive into Healthpeak Properties Incorporated's latest filing. What do you think about these numbers and what they mean for the company's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more corporate financial analysis. Also, don't forget to join our Discord community, linked in the description for more real-time discussions. Thanks for watching, and we will see you in the next episode of Corporate Decoder.